and Praveen Sahay, the research analyst at Prabhudas Lilladher. So let me first get Praveen on board because he's the author of that report. Praveen, tell us a little bit about what you're observing because, with the heat wave kicking in so early, one would assume that sales of air conditioners, fans, etc. would sort of hit the roof earlier than expected. But what are your channel checks indicating?
Yeah, thank you, Sonia. If I talk of Q4, that's because of the muted demand environment and inability to pass on the increased cost. That has impacted the consumer durable sector as a whole in the Q4. And that's also because of unseasonal rain, soft demand, and also the higher inventory of the seasonal products like of RAC and the fans, which the companies has built up in the Q3. So Q4 impacted because of that. However, our channel check in the month of April indicates there is some decrease in the inventory level in the channel, especially in the RAC. So just to give you numbers like of 40 to 50 days of inventory in month of Feb, which has reduced to around 25 to 30 days as per our channel check. And also in the April, there is a change in the offer and the discount promotions which the brands are providing in the month of March because of some slackness in the demand, which has gone from the system. So that's also indicates some positive indicator for seasonal products like of RSC especially.
Okay. All right. Hi, Praveen. Thanks so much for giving us your view. Well, let's get in Nilesh Gupta as well. Nilesh, good morning. Thanks so much for joining in. What's your reading of the situation? Praveen suggests that inventory levels are lower, so I'm guessing demand is strong. Unseasonal rains, did they have some impact? Could you give us your sense?
So, good morning, everybody. So, this year we started on a very positive note because in the mid-February onwards only, in the month of February, from mid-February to end February, we had a good run of summer in the western part of the country and also slightly in the southern part. Not so much in the southern part. So what we expected was this year would be one hell of a summer sale, which we expected because it was onset of early summer. But what happened, everybody knows, in the month of March, the unseasonal rains came across the country and that dampened the sale to a large extent. And frankly speaking, till a week back, everybody thought that this time the summer season is a washout. But I do not know whether I should say luckily or not. But now, since the last 1 week, the summer has once again come with a big vengeance, and we are seeing sales coming up. So yes, the month of March, which we have lost, if the summer becomes more intense, we may be able to recover, or there may be a slightly lower sales than expected. But one thing is for sure, the inventory levels right now, nobody does corrections. For the simple reason is you have summer till the end of May in the entire country, and in the north, the summer still extends till June and July. In fact, sometimes it goes up to August also. So corrections of inventory, whether in the channel or whether in the brand, will not happen now. It will happen post 10th of May. Looking at the season, that is the time when retailers and distributors will start cutting down inventories if they feel the season is not going to go as it is. But looking at the last 1 week, I think we are sitting on a pretty good season now.
Got that point, Nilesh, and makes absolute sense that this is some western disturbance spells, I think, that have brought in the showers and brought some much needed relief actually in terms of the weather. But Nilesh, a word on average pricing. What trends are you seeing? By how much are prices higher over, let's say, the last season? And what's the customer response to it?
So basically, pricing wise, if you see over last season, we are nearly around 7 to 8% more. But nowadays, in fact, I've told this earlier also on your channel, pricing doesn't matter so much to the consumer because 80% of the sale is happening on EMI. So even when the price goes up, the corresponding effect on the consumer's wallet is not so much because the price gets, the payment gets divided into 18 to 24 months or 12 to 24 months. So price is not that big a worry for us right now. And one thing is for sure, now at least the prices are stabilized. So there's no worry of the prices going up again. So I think we are, it all now being a seasonal product, it all depends upon the intensity of the summer and nothing else.
Nilesh, is it still, you said 80% of the purchasing is happening on EMI.
Are we still talking zero cost EMIs? Because otherwise, obviously, interest rates are higher. But is that the primary funding model, your zero interest EMI?
Yes, yes, it's zero interest EMI, zero down payment also in some cases, and a long tenor. Earlier, the tenors of zero used to be only 8 months, but now we are extending up to 12 to 24 months also in certain categories.
Oh. Okay. Praveen, from the listed space and the stocks that you track, where do you see the maximum potential, both in terms of valuation headroom as well as growth here on?
Yeah, so in our coverage, we like a Havels over here because they are the one diversified throughout the different product basket, and in them the wire and cable from the last couple of quarters is doing well and expected to do well because of the real estate story as well as the B2B segment, which are going to outperform, and in the Q4 also done very well. Secondly, on their ECD portfolio, it's largely on the fan segment, and with these regulatory norm change in the B side, they are going to get benefit out of that as well because of late in the last 3 years, they had excessively increased their distribution network under Rural Vistar. So on that front also, we are expecting some improvement in the top line for them. Apart from that, the Lloyd, which has gained the market share for them, and definitely we understand that there is continuous losses with the Lloyd, but as for the management as well, these losses will minimize, and we are also expecting the losses related to the Lloyd will minimize with the opening of their new manufacturing units in the south. So some logistical benefit they will receive. So overall, I believe that's out of all our coverage, Havels to outperform from here onwards.
Okay, all right, Praveen, I wanted to ask you about Blue Star. You know, we get the management and they have been telling us that they've been gaining market share. Now they're putting incremental capacity. Do you see a market share shift? Maybe Blue Star gains and Voltas loses out, or do you think someone else will lose out in terms of market share?
So you are rightly pointed out that's a Blue Star which has performed very well in terms of the market share over the last 2.5 to 3 years. And with the opening of the commissioning of their manufacturing unit in the south, and their target also to improve their market share from 13.3% to 15%. So I also believe that the competitive intensity in the southern market is going to increase, especially for the Voltas, because not only the Blue Star, the Lloyd, Daikin, they are also coming up with their manufacturing units in the south, and we will see some logistical benefit for them, and that definitely will give a competition to the Voltas in terms of the market share. So definitely the Blue Star, the first mover to get the commission their manufacturing unit, and will see some market share shift as well for them.
Praveen, just before we wrap, my final question to you, what are you expecting in terms of margins for a lot of these durable companies? I mean, we'll also hear from them as we get through the earnings season. But in general, what are the trends like on margins, keeping commodity costs in mind?
So in the entire durable space, we will see some around 30 to 40% of improvement on sequential basis in the margin, whereas on the YO side, we still see some 70 to 80 bips of deterioration in the margin. Because the copper prices, which has gone back, and that's an increase. However, some of the segments like of a wire and cable, which are able to pass on the prices, they have taken already 3 to 4% of a price hike in the fourth quarter. So there would be no much of an impact, or even I can say they will benefit in the margin side. Whereas the other segments in the ECD side, with the elevation in the cost and the demand sentiment quite muted, we are expecting the overall sector to see some kind of a deterioration on the YOI side in the margin front.
Okay, all right, got that. Thank you very much, Nilesh and Praveen, for joining in and giving us your sense of the consumer durables market, and of course how different companies are poised. The market, by the way, is getting very, very quiet.